why your trading strategy doesn't work. Hi, it's Charlie giving you Saturday's video. So this is such a common problem that traders have, that they either create a strategy or they have a strategy. So with mechanical rules, so they have a given pattern that they trade with, and they have a stop loss with it and a target or some form of exit approach. The problem for a lot of traders is that they strategy hop. So what they do is they have a strategy, and I'll explain why they hop from strategy to strategy in a second. But they try a strategy A here, and that strategy doesn't work after a while, or and then they go to B and C and so on and so forth. Oh, that's not B, is it? There you go. There's a B, and there's a C over here. So why does this happen? Why do these strategies not work? And so they then move to B, to C, and so on and so forth. In fact, we've had some emails come in this week, and I'll just take some screenshots of some of these, some of the comments that I've had here. And here's a typical. Oh, there's one there. Just taking a screenshot of it. Here's a typical response that we had. I think the question that went out was, "What's holding you back in your trading?" And so this person said, "I've spent so much money over the years on courses and strategies, spent countless hours learning, all doing all the right things, but it hasn't been able to build a solid foundation with their trading. I've become super jaded," I think he meant jaded there, maybe, "about spending more money on courses. I want a legit coach that can really help me. I am not looking to become rich all of a sudden, but need to see the light at the end of the tunnel." So this person's obviously been down this route, with trying stuff, trying courses, various different strategies and stuff like that. Right, so that's one. I've got another one here as well. Let's see. It's similar, I think. I'll have a read of it in a second. Let's have a look. "I learned to trade, took me 4 years to get my head around it. There's so much on YouTube. I think I wasted 4 years. I've just never had a strategy to stick to and be consistent." Okay, so big, interesting points of note there. "I was always staring at the charts, and there was not a lot of genuine stuff on YouTube. I take no notice of the TikTok, as I know how hard it really is, and I've been there, sucked in so many times. I'd like to really actually be profitable the way the professionals stay profitable with their day-to-day." Right, okay. So these are just two examples of the sort of answers that we've had come in to that question. And so why is it that people invest a lot of time and energy and can then be several years down the line and haven't got any results? Well, one of the main problems with having a strategy is that normally the strategy is, I have strategies, just so you know, I have strategies as well. But a trader will back test a strategy. So they'll back test it, and the results will be good historically, and then they start trading with it in a live environment, and either it just stops working and starts losing money straight away, or it maybe works for a while and then the performance backs off. And so this is quite a common thing that happens, because unfortunately the markets aren't as simple as purely just trading a mechanical strategy. They really aren't. Although people on YouTube and the likes will tell you that, they're not. The markets are highly complex things. And so what happens is that for a lot of people, they create a strategy which looks good in back testing, and they always end up scratching their head as to why it doesn't happen in the future. Well, because in essence, they have curve fitted their strategy to that historical data, and then at some point in the future, it will stop working with that, with future data. So that's a big issue that a lot of traders have. But it's not the same. It's not like it's like that for everybody, because there are strategies that back tested, and then into the future they do actually carry on working. So one of the other problems that is really difficult for traders who trade with a mechanically based strategy, so completely rules based, and this is why I have issues with this, is that it's very tough to stay with it, because once if the strategy goes into a drawdown for an extended period, even if they've in their back testing they can see that it's had drawdowns historically, it goes into a new kind of drawdown in the future, and they don't know what to do with it, so they end up panicking and at some point and stopping the strategy, and then they bin the strategy, when it could be that there might this is the difficulty. It might be that the strategy is fine and it actually starts working again and carries on into the future, but they've already binned it and moved on to another strategy. So that can be a problem as well. The difficulty, if you don't throw it in the bin, is that the strategy could keep on coming down. So you need to have a point of no return. You need to have a point where you say, right, okay, at this point, or whatever the point is, I'm going to stop. I'll stop that strategy. So if it has a given drawdown, I will then, which is greater than any historical drawdown, then I will have to cut it. So that still doesn't mean that it's not going to work in the future. So there's so many different permutations of what can happen that it makes it very difficult to stay and stick with a mechanical approach. So what's the solution? Well, the way that I look at it is that, as I've always looked at it, is yes, have strategies. I have strategies for entry and exit, or entry strategies which have rules and all of that. But I do like to place them into the context of the current market, and that requires analysis. That requires intermarket analysis. It requires multiple time frame analysis. Bit of fundamentals, bit of sentiment as well. Now, and the problem that I see for a lot of traders is they say, yes, but that's then discretion, Charlie. It's almost like discretion is seen to be an ugly word, and yet they're the same people who are losing money. So if you can approach the markets, do analysis, technical analysis, intermarket analysis, top-down approach, multiple time frames, all that stuff, and then get a gauge of the market, and then so that you can then say, right, okay, I want to be long this market, or I want to be short this market. Then you pull out the strategy which is applicable at that time to what you want to achieve. And then you've got a synergy between your overall analysis and using a given strategy. The problem is that takes work, and a lot of people just want a 1+2 type, paint by numbers strategy, which is just, please, I just want a strategy which is 1+2 = 3, just a paint by numbers thing. Like I've already said, it's not that simple. The markets aren't that simple. So I'm not saying that you can't find something like that and make it work, more so on the higher time frames. But a little bit of analysis on top of that really can make a real difference in your overall trading. So the biggest problem is strategy hopping, and people potentially jumping out of a strategy just as it's about to turn back up again. But the big risk is that a back-tested strategy ends up going into drawdown and would just continue going down into perpetuity until you maybe blow up an account. So that's a big risk. So there has to be a solution, and the solution is placing a strategy in the right context, merging it with all those other things that I've already talked about. The problem that for a lot of people, a lot of traders have with that, is it actually requires more work. They don't want more work, they just want to do some back testing and then let the strategy do all the thinking. Unfortunately, I don't think the markets are quite that straightforward. And so, of course, you may be disagreeing with me, and I'm just giving you my views, but I've seen a reasonable amount over the years, and in order to say, do you know what, if for those traders who spend the time doing it, that way, where they actually analyze the market and have, strategies as entry and exit, maybe techniques as well, in conjunction with that, it tends to serve them better. Hopefully that's given you some food for thought. By all means, give me plenty of abuse in the comments today if you want to. I don't mind. If you want to disagree on that, it's just my opinion, like anybody else's. But certainly, what I do see is lots of people who are desperately using strategies and wanting their strategies to be their holy grail end up losing. So there has to be something else. And I think I've got enough experience to be able to say to you, look, if you're in that category, then do look at actually combining strategy with analysis. And yes, that's going to take you a bit longer to get on top of learning analysis and all of that stuff. But do you really think that traders at firms are literally just following a single signal? Not necessarily. They are taking in all sorts of information as well as, and I'm talking about, why did I say prop firms? But well, probably because traditionally in banks we don't have manual traders so much, but that's what they would always do. They would take into consideration all sorts of information. They would have patterns that they will use to get into trades, but that is in conjunction with other stuff. Anyway, there you go. That's our Saturday video. Enjoy your weekend. I'll be back in touch next week.